Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that bright green on the crypto bubbles over here. We can see, of course, that we did get a nice pump to 23,000. And hey, guys, boom, just for a little bit of truth in advertising, let's go over what I was saying in the last episode. As you can see, price action is really trying to hold on to my alpha momentum hold level here, where we're just going to hold our basic momentum. So if we can do that, let me just zoom in here so that you can see what I'm talking about. You see that kind of gap right here between this pink line and this red line. As we fill that gap or keep our price action wedged between them, then we do have the possibility, remote as it is, to just kind of bend these things to the upside, and then that could end up being what takes us home to the bullish conditions. That's why losing this level is so critical. Guys, there is a method behind this madness. I can control these EMAs knowing my levels. I can control my emotions knowing these levels. And if we, again, if we pass this 22,937 in the next 25 minutes, then we will have bent the 4 EMA enough that it could scoop us up, okay, at least perhaps to this 23,000. And if we get over there, then we're talking about, potentially that volatility pinching shut, which I was just showing you on the indicator over there. But okay, guys, so basically what I was saying is that we had to hold my 4-hour momentum level in order to have the possibility for our EMAs to squeeze bullishly to the upside. And so, guys, if you're questioning whether or not this system that I've developed, this alpha momentum pool, these volatility pivots, whether they work or not, just check it out. The proof is in the pudding. I've been doing these transparency and kind of proof in advertising segments on almost every other episode, just so that you guys can hold me accountable for what I'm saying. And clearly, we're setting conditions, having validation levels, and then with candle closures above those validation levels, we are going to have confirmation, right, of the idea. And that way we can trade both up and down using different concepts. We don't just have to be some moon boy just calling up or some doomsboy calling down, and that's what I feel about the market, because my feelings feel that the market feels that the general feeling is bullish, the general feeling is nobody cares about that stuff. I talked about this before. Nobody cares about your feelings. Nobody cares about sentiment. I don't care if people are going to be surprised in the market or they're not going to be surprised in the market. Everything that we need to know is contained in the price action itself, okay? The EMAs give us a little bit of a clue. The price action tells us the rest. And if you can decode the momentum in the price action, then you can set validation levels so that if you have conditions, right? We had a condition right here of a possible EMA squeeze to the downside. Okay, but we also had conditions of a possible little bit of a gap for a pump to the upside. And so we had to set validation levels for either the bullish conditions or the bearish conditions. And that's how you can see how I can derive a hold momentum level, right? And then where can we get additional momentum to the upside? Well, we could take out some of our candle highs on our way up here. And then where are we going to also be able to calculate where our MACD and just kind of general indicators are going to kind of flip more to the bullish side? We can take a look at the price action for that, and then we can take a look at volatility and some of these other indicators to try to determine where volatility may be more likely to spike to the upside should we get over that. Now, what was I calling for? Well, if we breached 22,670, which we did not do, we just basically skirted off of it, that we could crash down. But if we were able to hold my momentum level in the bottom of this alpha momentum pool, then we could see us having a squeeze all the way to the top of the momentum pool, where if we got above 22,937, we would likely have additive, additional momentum added to our current momentum, which would then push us up probably to the volatility pivot here, which was at 23,140. Now, in order to have continuation to the upside based upon this 4-hour model, we would have to confirm candles above 21,140, and we did not do that. Okay, so we're not just pumping to like 25,000. We're not pumping to 30,000 right now. Basically, the trade that we were able to take was to 23,000, which is what I said in the previous video, because we didn't have any type of validation, or confirmation above these levels yet. So, guys, conditions, validations, and confirmations, right? Using momentum, volatility, and price action. F your feelings. I don't care about the sentiment of the market. We're going to do this mathematically. We're going to do this probabilistically, and we're going to just continue to absolutely kill it, Alpha Fam. So thank you for subscribing. Thank you for showing your support to this channel and encouraging me along the way. We are developing a system that is absolutely working and killing it, guys. Let's go ahead and jump to the charts because that's enough truth in advertising there. And what I'd like to just point out here, I was having a discussion with a friend about how we're putting in a little bit of a range at this area. I mean, we can take a look at this wick low here and this peak high, so you can kind of just establish a little bit of a line here. And, if we take a look at the bottom of our range, we have something more or less here, right? You can see we tagged this a couple times, kind of deviated down here, got a little rejection, and then pushed back up. And so this is really the range that we've been acting in, essentially between 25,000 and 18,000. Now, what my friend Retta was mentioning to me is that this is something very similar to what was happening in the past when we look at the previous bear market, where it's not quite as obvious just because of how zoomed out we are. But if we kind of zoom in, it looks pretty similar what was going on here, where you can see, if we just kind of ignore the choppiness of the previous markets, that was back when there was blow-off tops and, a lot of strange stuff going on. We can see that we do have something very similar here. Maybe, I guess, we could put it somewhere like that, right? This isn't a perfect science or anything. This is just trying to figure out some type of basic levels here. Maybe we had 2 deviations on this one, okay? But let's stretch this out a bit. And what you can see is that we had dropped down basically from 64 all the way down to essentially 3,000 something. So basically we lost 50%. Just keep that in mind. From this shelf up here, we lost 50%, and then we created a channel. Now let's go to where we are right now. I'm going to have to just zoom a little bit. Go to where we are here, and then let's take a look at where we really started to capitulate. That was really over here at 40,000, right? Because we did have this Wyckoff kind of pattern here between the range of 30,000 to 50,000. We had this kind of Wyckoff-ian pattern, and then instead of signs of strength, we actually put in signs of weakness, okay? If you guys are Wyckoff traders, then you know what I'm talking about, right? We had signs of weakness. SOW, essentially around 40,000, okay? This was after the upthrust, and then it just did not make any type of recovery. That was your signal to definitely get out of the market if you hadn't already taken your profit at that fib line that I had been pointing out for months before we even reached it. So again, guys, the Alpha Fam has just been absolutely killing it. We rocked this entire move to the upside. Okay, we grabbed the Pico bottom here, we grabbed the Pico bottom here, and then we actually sold the Pico top with planned out in advance, months in advance. And so we got this entire bull run of 40% on Bitcoin, which is a technical bull run on Bitcoin, not a bull market, just a bull run. But we then broke down from 40. What did we hit? We hit 20K, right? What is that? That's a 50% crash. Does that sound familiar, Alpha Fam? Yeah, look, that's what we did here. We went from essentially 6,000 to 3,000. We had a 50% crash. 40,000 to 20,000, more or less, right? And that's basically a 50% crash. And then what did we do? We established some type of a channel. We established some type of a channel here. Let's see if log makes this a little bit easier to take a look at. Yeah, it does. And so, what we can see is that then after we had this deviation at the bottom here, We then had a pump all the way to the top of the channel. What are we doing right now? We had a deviation and we're having a pump all the way to the top of the channel. Now, some people would like to say that this, like this setup that we have here is more like 2018 2019 kind of bear market, and some people are saying it has a lot of similarities to the 2015 bear market, which I also believe that it does in fact. But it's really not that simple, okay? Each bear market, each bull market is going to have its own unique characteristics, and so there are going to be some curveballs. And sometimes market makers, sometimes just the market in general, does follow fractals, and that's just because that's how humans behave. That's how our bots and algorithms that we create behave, right? Under certain conditions. And so, under those conditions, they may behave rather predictably. However, it is a fundamental principle of the market that the market cannot be 100% predictable at any time. There's always a chance for randomness and volatility. That's why I have a separate measurement from volatility. I don't just measure momentum, right? If the market was 100% predictable, then I could just do momentum trading. But every once in a while, there's a jitter in the market, a randomness that's just infused in the fact that when everybody is targeting the same numbers, the opposite of what the market expects tends to happen because everybody can't make money on the same spot. Somebody has to lose, right? This is a zero sum game, okay? Somebody has to win, somebody has to lose, especially when there's high leverage. That's why sometimes when you look at fractals and it pushes up in one part of the fractal, and then you have the perfect fractal in another spot of the market, and it pushes down, okay? Or it just goes sideways, but then the rest of the fractal ends up playing out anyway. It's just because every once in a while there's a random jitter, a volatility kind of check. And that's why I measure, again, a volatility separate from a momentum. And it's really important to keep that in mind that just because we see fractals in 2015 or 2018 or 19, it doesn't mean that it has to happen again. It could go completely the opposite direction. For example, okay, some people might want to say, well, they were thinking that we were going to have a blow off top. It was almost a given that, Bitcoin always has these blow off tops. And so all of the market was predicting, 100K Bitcoin, right? Because they were saying, we're going to have a blow off top to 100K. And then, sure enough, what did we have? Well, the market introduced random volatility, and that volatility, instead of having this blow off top to the upside, what it did is it actually did the inverse of that. It basically had a blowout bottom, right? It had basically a sine wave, okay, which I guess you could consider the opposite of a blow off top. And so, what are we seeing here? This is that kind of randomness in the market. You cannot have 100% predictability. Everyone and their mother was targeting 100K Bitcoin based upon the blow off top model, right? Where maybe we'd have a dead cat bounce and something like this, and then that would look a lot like what we saw over there in 2018 and 2019, right? Where we just had this blow off top, 2017, 2018, 2019, where we had that blow off top, and then we chopped down, and then we dropped 50%. Well, look at this. We had the inversion of that, and then we had a double top, but we still are getting that 50% drop, and we're still creating a bit of a channel at the bottom. So follow what I'm saying here. Basically, we do have a fractal from the previous bull market and bear market. It's just that we should be on our toes, even if we identify these things, because they could suddenly do the exact opposite of what happened before, and it could be totally random, even if the fractal is playing out extremely well. With that kind of notice and warning out of the way, because I think a lot of new traders get tripped up on that. I think a lot of new traders, they see, oh, this pattern is playing out perfectly, it's gonna hit this or that, and then it ends up doing the opposite, and they just lose all of their money because they get too much faith in the math. Oh, it's programmed in, it's programmed to do this. Well, guys, you saw that we had the the inverse of a blow off top. Okay, like instead of having a blow off top, we actually had a blowout bottom. Here creating this kind of a sine wave, and that could happen again. Okay, so if you guys are expecting us to come out of this channel and do something like this, right? You could be very, very surprised if we end up doing something like this instead, okay? Like the market doesn't have to care about your feelings, okay? This thing could come all the way down to 10,000, 8,000, but it just might do it when, everyone expected it to do it here, but it may just end up doing it over here. You see what I'm saying? So guys, don't try to just trade by fractals. Don't try to don't get locked into that it's pre-programmed kind of mentality. The less you are stuck in that it's pre-programmed mentality, the more likely it is to happen. But the more you're stuck in that pre-programmed mentality, the more everyone just focuses on the exact same numbers, everyone targeting the same numbers, the market increases volatility, and the chaos starts to happen where you start doing the opposite of what everybody expected. Okay, so again, it's not about sentiment, it's more about volatility, it's more about probabilities, and it's almost kind of like quantum physics. You can't measure something and know where it is at the same time. That's a quantum principle of particles. You can't measure something and know where it is. So you guys, we're trying to measure these things in advance, and the market can just end up slipping through our fingers if we're not careful. That being said, we can see that we do have this deviation over here, a pump to the top, and then what happens in this fractal, okay? Again, buyer beware, but what happens in this fractal? Well, essentially we have a pullback. Let's say that if we follow this fractal, we would have a pullback somewhere to 20,000. Then we would have a little bit of a double top here with a little bit of a divergence, and then we would chop down. We might even kind of take out that liquidity on these lows around, let's say, 17,000. And then if this fractal plays out, then we would chop up sometime in the middle of 2023. So this would have been our spring rally. We already had it, kind of that Christmas rally, kind of spring rally. Then maybe tax season comes. Everybody sells their crypto to pay for taxes. Maybe the federal government has some type of debt ceiling crisis, and so the stock market takes a tumble after a little bit of a run, right? We had a nice run, but it ends up being some type of fake out because Congress can't get its act together and pay for what it's actually spending. And so then we have a debt crisis in the US that tumbles the markets. We retest our lows, and then based upon this fractal, essentially at that point it's tagging the top again. And then if you look at this fractal, it then scares everyone out, right? It freaks people out. There's a drop here, and then what happens is that we chop back up quite rapidly, and then it's just to Valhalla from there. Okay, not quite this high. If you take a look at this model, it would be somewhere more like here, right? Somewhere more like 50,000. So what would this fractal suggest? This fractal would suggest that maybe 25K is our max. We might tag it actually 2 times. So if you miss this rally, perhaps there could be another rally of similar size in just a couple months. So don't worry too much. And then we're going to have a couple, shakeout moments in order to get a nice rounded bottom on this market, and then we just get sent from there. And then we don't make an all-time high. We just hit maybe 30K or 40K or 50K, somewhere in this area. And then that's going to be our real mid-cycle rally, sort of what I was talking about on the last 2 macro Monday videos. You guys should check that out if you haven't watched them. The macro videos really do give you a heads up about what's been going on in the market, and so far they've been pretty deadly accurate. Of course, there is a lot of theory involved there because we are projecting pretty big ideas over a large amount of time, and so it's going to be less accurate than some of these like 4-hour projections or whatnot. Okay, there's just far less precision in that. But for what it is, it's been very good. And then you can see what happened the last time that we had this type of right. We had the top of the market, then we had the bottom of the market, then we had this kind of mid-cycle rally. Right? It didn't hit the previous all-time high, but it came, up to kind of the neckline of the previous all-time high, which would be somewhere in here, maybe 30,000, maybe 40,000, something like that. And then it made an effort to go. But of course, we got intervened by something in the world. We could get intervened by something in the world again. It retested the lows one final time, and then it just got sent to the next bull market. So if we take that type of a fractal, let me just, let's see, where's that fractal thing? Let's just take it from over here, and we pull this out, right? We could be talking about, let's see, let's just kind of eyeball this kind of fractal thing. These things are always very awkward to use. Now remember, it's not going to have the same type of magnitude. So really, I shouldn't be using the run there. Yeah, sorry, that's going to distort people's concepts. I'll just use the actual breakout of this channel. There we go. Because each market has its own angle, its own inclination or whatever. It's inclined differently. So yeah, if you can see that, it's something like this. There we go. Now you can see it. Now you can see it. I mean, this could take a long time if this is true, okay, guys? But you can see, basically, we broke down 50%, had some bounce to the top of a little channel that we carved out, had a deviation, came to the top of the channel, really where we are right now, to be honest, if we're looking at proportions. And then we break down to, let's just say it would be 20K in this case, pop back up, just kind of hit a low over here, maybe around 19K, right? So basically we fall to 21K, then we fall to 19K, and then we chop back up to approximately 23K, just using this fractal. Okay, so we don't actually get as high as we previously did. That's how they fake people out, right? People think we're going to go higher because we made a higher low here. They think maybe we're going to break out. They're saying, oh, this is a cup and handle, right? That's what they were saying back here, but it just didn't end up working out. What happened is the market ended up fooling them, coming back down. Again, maybe there's that some type of a debt ceiling crisis or some type of a crisis that just brings us down. The market always finds an excuse to do whatever they're going to do. And then finally, after the next check back, basically retouching our lows from where we broke out, not the deviation, but where we actually re-entered the channel, then we just take off from there, have a mid-cycle rally, maybe to 30 to 40K, something like this. And then if there's another type of COVID, if there's if there's like a nuclear war or something like that, we come check back, and then the real market goes, right? Maybe 2025, 2024, right? We don't know. So this is what I just wanted to show you for the kind of your macro for this week. I didn't really make a macro video. I think the last two really covered my thoughts pretty well, but I did just want to add this to our understanding that we could see something like this, and that we could have a considerable amount of time at the bottom of the market in order to refuel for potentially that era in 2024, 2025, when the Fed actually does cut interest rates again, and then we just go from there. Now, if the Fed cuts interest rates in 2023 or 2024, then this could, this fractal may be more contracted, right? It just depends, when does liquidity come back to the system? So it doesn't have to be quite so extended out there. It could be a little bit of a shorter period. I can kind of just crunch this to kind of make it the shortest possible, something like that. And then we would really be talking about, let's see, let's go on a higher time frame just so I can see dates better. Then we could be talking about reaching a bottom at the end of this year, right? After reaching a peak in spring, and then coming down to the bottom of the market again by the end of the year, and then taking off, assuming that this fractal is working out. Now, 2015 had a very similar kind of fractal. It didn't have the same kind of a check back, but overall, this is what quote unquote is pre-programmed in Bitcoin, and so we don't know what exactly is going to happen, but this is the fractal, guys. And don't forget that there is this mid-cycle rally before we make another all-time high, and there should be some type of a check back. Now, either it will use this area as support, right? Or there's a deeper crisis which comes back to check out this breakout just to make sure that, just to double check. It's basically like an extra layer of support below there. So, nothing interesting happening in the world. Maybe we just come back to, 20, 25K. Something crazy happening in the world, then maybe we come back to 20K, right? 18K, something like this, and just go from there. But that's one macro perspective that you can keep in your back pocket as we just consider these things in the market. Now, I am going to go over the key levels to watch on Bitcoin just really briefly. And so let's just go ahead and clean up this chart. And let's check out the 12-hour, which closes in 4 hours, because some of you may be trading right now. And if you are, then let's see, 12-hour. Here we have the 12-hour key levels to watch. Put that on auto. And one thing that you'll notice just right off the bat is that our additive and subtractive momentum here is essentially at the same level as our hold current momentum, which means that this is a very significant level. Okay, so 22,920 is a very, very significant level. There's almost no alpha momentum pool here whatsoever. Okay, it's just basically a line. Okay, and we are currently above that, so that is good. But we are below our general continuation, so your indicators may not indicate any bullishness right now. This does have a chance to continue to pump so long as we're above 22,920, but being below the general indications, just the general indicators for bullishness, you know, there is a chance also that we just lose this. This is a very shallow pool. There's nothing really to hang on to there. You're either above it or you're below it. And so if we break under it, we can still have a chance for bullishness above 22,830 on the 12-hour, should there be a volatility spike. But this is more or less in position to consolidate or reset if we don't get above 23,213. Now, in the last video, I was suggesting that we could get up to 23,000, and the volatility pivot previously was up here around 23,170-ish. We did not exceed that level. We actually tapped it almost exactly, but we did not exceed it. And so that's why we're just having this sideways look. In other words, we could continue to go sideways, and I'm still looking for that 23,213 level to really get our indicators to flip bullish again. That's when the traders will come in, basically taking out this kind of wick over here. That's when those traders will really step in, and maybe we're going to gain some strength to the upside. Otherwise, people are going to be looking at their indicators, and they're just going to be seeing sideways in large part, and they may just decide to sit it out or continue to take some profit. So it's really just hit or miss at this point. However, in general, we're above the momentum pool, we're above the volatility pivot, and so in my mind, this is a bullish orientation unless we violate under 22,830. Okay, that's my opinion on the 12-hour. We essentially have support there, in my opinion. Let's go ahead and take a look at the daily. The daily has a very similar story, except we do have a much wider momentum pool. So again, this is the 12-hour up here, basically saying you need to hold on to this area. And what the daily is saying is that yes, because we didn't get above that 23,000, whatever level, that we have a chance to break back down into the momentum pool, and but we're not going to be bearish on the daily, which closes in 15 hours, unless we breach essentially 22,578. Now the general continuation, the loss of momentum, and the volatility pivot are all essentially in the same area of 22,000. Let's just call it 600. Okay, so anything above 22,600, I'd say Bitcoin is still in good shape at the close of 15 hours from now. And let's see, when does the 12-hour close? 3 hours. All right, so the daily closes within 15 hours, and that suggests that we have a lot more room to recover on the daily than we do for the 12-hour, which makes sense. It's a bigger amount of time, right? Guys, the 2-day does close tomorrow, and the 2-day is still looking very good. Obviously, just from a price analysis, we can see that we basically have a higher high, and we are on higher low watch. So for the 2-day, if we do come all the way back down to 20,000, let's just call it 900, we're still going to be in pretty good shape. We will lose momentum under 20,946 if you want to be precise with my system, and my system is pretty precise. But in general, we're looking pretty good. Let's throw on our EMAs just to take a look at what's going on. Hey, look at that. The 200 on the 2-day is right at that level. So that makes a lot of sense. It takes a lot of effort to break through the 200 EMA. And if we have a pullback, then we really want to hold on to that 200 2-day EMA. Otherwise, we could have a deeper check back, much lower. So again, for me, at the close of the 2-day in 15 hours, we really want to be above 20,900 in order to have the next set of 2 days also look possibly bullish. Okay, and then the 3-day is very similar. And again, the 2-day and the 3-day also have this $23,000 level as something very critical. So 23,000 is also the level that we're looking to hold. But if we go to the 3-day chart, and just want to double check, I think I was on the yeah, I'm sorry. The 200 is up here at 25,000. What we have down here on the 2-day is actually the 89 EMA, which is also a very difficult one to break through. So you can see we check back to it perfectly on this breakout on the 2-day. We checked back to it perfectly, and then we launched off of the 4 and the 89 crossing here. And so again, like we want to preserve that. Our 9 EMA on the 2-day is down there. But no, the 200 is at approximately 26,000 for the 2-day, so that suggests a hard limit should we get another push to the upside. Sorry for that confusion. Just a lot of time frames to take a look at. So let's turn that off and then flip to the 3-day and take a look at the 3-day. For the 3-day, let's see. Again, like the 23,000 level is just so important. We do have the 3-day up here, 200 EMA above at 28,000, which does suggest, there is the possibility to pump up there should we hold this 89 EMA. We are above the current momentum pool. We are above the general continuation volatility and the additive subtractive momentum. So everything's looking good for the 3-day. If we can hold this level, we could potentially pump again. But that does close today, and so we will find out in the next few days. But yeah, guys, I can't really can't really fade anything that's going on here. If we do jump over to the weekly, let me turn off the 3-day just so I don't get confused. Jump over to the weekly. I just want to see where the weekly 200 is. There we go. The weekly 200 is at 25,000. So those lower time frames, moving up to the 3-day, the 200 EMA got higher and higher and higher. But as we look at the weekly, which is a higher time frame, the 200 EMA actually came down. So I'm starting to have more of a bias towards that 25,000 as a limit, just based upon the weekly. Let's take a look at the 2-week. What's the 2-week got going on here? Oh yeah, you can see that we're actually at the 21 EMA on the 2-week, but that has a nice slope to it. So this looks very good. In 5 days, if we could close, at this level or even higher, I mean, this is still looking like it has juice, maybe even to go up to that $28,000 level. So I'm not going to fade this setup. It looks like we could still potentially squeeze a little bit higher. I'm not calling for that yet. This is just really neutral right now, but this looks very interesting, guys. Yeah, but the weekly and the 2-week are not closing. So again, we're just dealing with the 3-day, which looks very nice. If we can hold this level, potentially we could even get up to 28,000. The 2-day is already squeezing up to a 25,000. And we're halfway there. Could we make it the rest of the way? I don't know. We have this wick as kind of resistance here. We have this wick kind of resistance here. And so 25,000, yeah, but maybe 26,000, not so sure. And then the daily, really, we have not too much overhead there. Let me see if I have the 300 anywhere. Yeah, well, you do have this Alpha 9 knockout right here at 23,888. So this could be a limitation somewhere here at 24,000, or we could just get rejected right here just because of this kind of crossing. Again, I don't know how significant that is. I've never really experimented with the 300s crossing. Bitcoin rarely has the 300s in play, but we do see that the 800 is up here at 28,000, and that is one that traders do tend to look at. So at least these lower time frame traders. But if you apply it to the daily, it's right there also. So yeah, I mean, we could still potentially fill out that range, and I just don't see anything. I just don't see anything wrong. I mean, like, are you seeing the same thing that I'm seeing, right? Like a 12-hour looking good. Just need to get above 23,200 for confidence. Daily looking really good. 2-day looking really good. 3-day looking really good. And they all close today. So if we hold these levels, I mean, it just looks really good. That's all, guys. Let's go ahead and take a look at our volatility. Let's see. This is the 12-hour. So we can just jump up to the 12-hour volatility here. And you can see that we are pinching off as we are pushing up. So that would suggest that the 12-hour may want to consolidate a little bit. That is the kind of oddball out of the others. Let's look at the daily. The daily has pinched shut and is turning around. So let's just take a look at that chart again. So it did pinch shut and it's starting to turn around. That suggests that the daily might want to go into a consolidation. We're going to have to watch this one because it is reaching levels where I would suggest that it's in play. So this could end up into a consolidation, which could be a deeper retrace. Just going to have to watch that as it breaches my 80% level here. The 2-day, however, this one is still pushing up. So could we get another reach to the sky before it tapers out? 3-day probably has the same. Oh wow, 3-day has a lot of fuel left. So this is kind of suggesting to me, if I just do just kind of a loose interpretation, and again, there's so much randomness involved with volatility trading, okay? So this is just telling me that perhaps we're going to have a 12-hour or maybe even daily pullback or just continuously sideways for a couple days or maybe a couple sets of 12 hours. And then the 2-day may want to have one final thrust, and the 3-day may want to have one final thrust that's, of pretty good significance, right? It's another pow kind of moment. So not sure, but that's my interpretation of the volatility there. And again, guys, a lot of that is an art. It's not really a perfect science with volatility, because what is volatility? It's volatile, right? It's chaos, right? So hard to predict just based upon that. But as you can see, our momentum is incredibly good on every time scale. So momentum is good. Volatility is just a little bit shaky, and the price action obviously is good. Our ADX is still pointed almost straight up on the 3-day. It is starting to soften on the DI. For the 2-day, same thing, softening quite a bit on the DI, but still quite up there. The RSI on the ADX is starting to round a bit. Yeah, there is a little bit of divergence going on with our RSI, but it's just a little bit of a deviation that we can see here. Let's see to the daily. Daily is overheating on many of these indicators. And also, this is a little bit higher on the RSI here. We have this kind of a higher area and then lower. But on the price action, well, we have this wick, but I think this actually lines up. Yeah, this lines up here. So we have lower and then higher. So this would be some type of a hidden bearish divergence, possibly. I mean, is this a technical low? I don't know, but because this is all kind of one impulse to the upside, but there is a little bit of divergence on the RSI, just suggesting this system is losing a little bit of energy as it pushes up. And if we look historically, right, if we look historically, you can see that whenever we get into these areas, up here, and when we start to get a little bit of a toppiness, we tend to have these little kind of deviations up here, and then we make a lower one, either a double top or a lower one. And it looks like we're making a lower one, or this could have a little push up and then it will come down. But you can see it here, right? This is kind of it. Then it drops down. This is it, and then it drops down. There's a big drop in the middle, but you can see it had choppiness at the top. You had a little choppiness at the top, choppiness at the top. Let's get the 2-day. Yeah, so for the 2-day, we really don't have too much going on. Just this is looking pretty fine up here. Yeah, so the 2-day is not ready yet, and I would just assume that the 3-day is the same. Yeah, 3-day looks fine also. But the daily has this divergence, and I'm just going to guess the 12-hour does as well. Yeah, the 12-hour does big time. It is just borderline, so yeah, just an analysis of these divergences. We could be forming some type of a bearish, hidden bearish divergence or something that could end up bringing this thing down. So we're just going to watch that very carefully, especially that daily. If the daily doesn't get another push, then we'll find out. But yeah, guys, that's what I'm seeing. Just taking a look at volatility, momentum, and then also price action. I can see that there is a little bit of a slowing down on the daily time frames, but on the 2-day and 3-day, they are still very excited and very interested in perhaps having another push. if we look at the MACD, yeah, we are getting a little bit of a cross here on these EMAs that could just continue to soften us. So we had a bullish cross here, pushing us up, and now we're starting to have this kind of bearish cross on these smaller EMAs on the MACD. 2-day. Same thing, we got our first white bar on the 2-day, but still pointed very much up. And then the 3-day very much pointed up. So yeah, 2-day and 3-day still look like they want to squeak something out, but the lower time frames are starting to get exhausted. So we'll see if that contaminates the higher time frames or not, or if the higher time frames just push it through, right? There are many indicators that we can take a look at, but I think this is pretty good. For example, the jewel here, it does look like it's starting to curve on the 3-day. 2-day is starting to get a red flag. Then the daily was really red flag city. It was a 12-hour. 12-hour has a huge red flag that this thing could possibly turn around. So this thing is not dead accurate or anything. You can see we did get a kind of blue flag up here, and we did have a nice run. So they do tend to play out, but oftentimes it can be after after another move. So this should have suggested that this could have been the bottom of the market, but in fact we had the bottom of the market over here at 16,000. But this thing gave a blue flag to invest at like 20,000. So that's a pretty sizable difference, right? It's like a 25% difference. So this thing's not perfectly accurate. So there could be a 25% variance here, right? So we're at 22,000. We could easily go to 25,000, and this red flag could have just been off by 25% or whatnot, right? All right, guys, just going to end it there. Should I just take a little bit more time to talk about the stock market? Yeah, let's do it. Let's talk about the stock market really quickly. We did break our downtrends on almost every major market. So if you take a look at this, downtrend that we've had since the peak. Let's see. Let me put it on. Let's put it on the 2-day just for a cleaner chart. Get rid of these EMAs. Yep. Okay. So you can see we basically have this trend line coming all the way down. Sellers were always able to just have victory and sell off everything here. Briefly, this line that the bears were defending got breached by the bulls. And now we've come back to the line again after breaching it before. We breached it a little bit here. We breached it a lot there, but bears just pushed it down. And now bulls are saying, no, we're in control. We're breaking out, right? And really what we have to take out is this 4182 on this ES1 S&P mini futures over here. And so for these continuous kind of contract things, we could continue to push up perhaps to that line, retest this wick, and then that could be the fake out rejection. Or if we get above that wick, then maybe we have a measured move off of a cup and handle, or even a inverted head and shoulders over here that could take us all the way up to 4,600. That would be quite ambitious. I think just planning on approximately 4,400, 4,300 would be pretty good if you don't want to get wrecked, and then just playing it by ear should we get to that area. But the super conservative play is maybe 4182, these are substantial moves. This is effectively another bull run in the stock market. So, what's our lows here to our high? 15%. What was it here? 19%. So if we breach 4182, we're going to have 20%, and 20% is a bull market in the stock market. and then this thing could go crazy, and that could just bring crypto on that epic journey, you know, to 30K, 40K, whatever. Look at NASDAQ. NASDAQ has been the slow one, but it did break out. Okay, it did break out. It's been very reluctant. The tech stocks have been hurting this cycle, but look at this. Perfect hit, rejection, broke through it, retested it, used it as support this time. Okay, so if this downtrend is being used as support on the NASDAQ futures NQ1 exclamation point, then you know this thing could also do the same thing that I was talking to you about the S&P 500. Now you can see that we do kind of get these you know, these kind of little fake outs, these deviations. So this could just be a deviation before a massive dump or just retesting our low or something. And maybe this is going to be why Bitcoin has a pullback or something, right? Just following the stock market. But in general, this is a good sign. Okay, this is a good sign, and the S&P is a good sign. Let's go over to SPX. The S&P 500 index, you can see it very clearly. This breakout, very strong breakout. Bears really tried to defend their line. They just could not, right? And this is now 1, 2, 3, 4, 5, 6 breaches on the 2 days, okay, for the SPX. So bulls are starting to change this chart, and it may be that this green box that I had set as our low, before we ever reached there, I had this marked out here. Maybe that's going to end up being the bottom for a while. I don't know. We'll find out. But it's very interesting stuff happening. Okay, very interesting stuff. You can see we're using this kind of support going up here. Let's take a look at the IXIC, the NASDAQ composite. And you can see very similar thing, right? Lovely breach of this zone, which, you know, they have these kind of deviations, but it broke clean of that deviation zone. So exciting stuff. Okay, this could be something. It's either a massive fake out or it could be something. Because if we lose this line, you know, we don't have a lot of support until we get to the top of the the pre-virus era, you know, pre-virus era highs, right? So that's going to be a kind of an epic fall. And if we do have that fall, it's not going to be fun for crypto either. Where we did get a bounce on the ES1, it was in line with this kind of channel that we have here. Let's see. Yep, right there. It's kind of channel that you can see. Just bounced around in there. Yep, we got shook out of it once. But look, we came back in. And then this was the kind of bubble from the unlimited printed money. And now the Fed has been just taking that money out of the system, which is why everyone's hurting, right? Because this was fake money. It was funny money, right? It's all the stimmies and everything. So the Fed's been taking that money out of the system, fell down to the bottom of this channel, and then we're just exploring that channel. So could we continue to explore that and then come back down to test maybe this one and kind of deflate this overall bubble? Because this was a bubble also, right? Like this is pretty out of line compared to over here, right? So, you know, this, like, we have more to deflate potentially, but could we continue along this channel for a little while before we do another rundown? And could these be just a controlled deflation? Okay, disinflation. Okay, It could happen. This bubble could get popped slowly and not as painfully as people may have projected. Okay, so there is the possibility for that quote unquote soft landing. But, it's not going to be great for investing. You're not going to make an all-time high necessarily. You're maybe going to make a lower high and then come back down and then try again. And it could take a couple years of trying before, maybe 2025 or whatever. It could take even longer before making a new all-time high on the stock market. This was just blown up so much. Just an epic bubble, guys. All right, I am going to end it there. That was your alpha for the day. Stay safe. Again, thank you for subscribing. Really appreciate your support, guys. Like and subscribe. There's a link to the Discord discussion group in the description of this video below. That was your alpha for the day. Stay safe and happy trading.